How's it going, everybody? Welcome. Thank you for being here. And thank you guys for being here. Really an honor to sit on the stage here with you guys and review all the risks involved in Bitcoin mining in the industry. And so I'd love to start, actually, we're going to get right into this. Let's take a review of like the last 12 months and how the Bitcoin mining industry has changed from taxes, AML law, and technology. Brendon, you want to start us off there?
Yeah, I think it's been a rough 12 months for the mining industry and Bitcoin miners. I think we've gone through a lot of, obviously, financial restructuring, operational problems from various policies, and now I think, in terms of risk management, all these companies on the stage have handled it really well in terms of the actual risk posing it.
No, the microphone.
Oh, okay. Yeah, I just think that in terms of the portfolio management that we've done across, all the companies here, where we have Bitcoin's down 75% since 2021. We have shorter access to capital, but that's dried up as well. And we've had to have whole rebalancing of not only the balance sheets, but from an operations standpoint as well.
Yeah, I'll jump in there as well. So I think a common misperception in mining is that it's an easy venture. You buy a machine, you plug it in, it generates you Bitcoin. If anything, it's far from that, and this past cycle has really taught us that. While you do have to be very financially prudent in deciding which ASIC to purchase, how to navigate capital markets, a lot of it is managing counterparty risk. And that counterparty risk is both commercial and regulatory. We've seen a lot of commercial counterparty risk this past cycle, everything from your hosting partners that host your machines to your utilities, power purchase agreements on the energy side, and then to layer on even more so on the regulatory front. And so that regulatory front is something that miners are dealing with around the world. There's no jurisdiction that is safe from regulatory uncertainty. And so right now, the name of the game is for miners to have longevity in their operations. They need to be managing their counterparty risk appropriately.
That kind of reminds me of, zooming out the past 12 months and considering how things are changing around the world, in regulation. I think one of the trends we can point out, and correct me if I'm wrong, is that although Bitcoin is one of the most decentralized cryptocurrencies, it's still fairly centralized geographically in where it's being mined. And so we're seeing a trend in people shifting or moving, decentralizing their sites. Is that something you guys have noticed or are involved in?
Yeah, so we're actually one of the only scaled miners that had all of our operations in Canada, and we've recently announced a merger that's pending final approvals that will actually give us geographic diversification into the United States. I think when you speak to geographic centralization, you're talking at a country level. I think one of the things that's really unique and we're seeing play out in North America from a regulatory perspective. Right. In Canada, we're having provinces make different decisions on how they treat and regulate mining, and we're seeing that as well in the US state by state. So I think it's a more nuanced conversation. And then we saw the headline come out last week. Russia's now the second largest country mining Bitcoin globally, despite their proclamations against Bitcoin mining.
We're still against it, but let's start mining.
Yes, a few short months ago.
Yeah. I think when we're talking about decentralizing mining operations or sites, at least, when we have, one country or province, or where we have these big mining facilities, at least, at the moment it's Texas, where it's capital of Bitcoin mining. We're very subject to the policy and regulations here, whereas, at least from a risk management side, decentralizing sites across countries, we're less subject to individual sites being, controlled by single government. Right?
Like regulation.
Yeah, and policy. The other thing is that
Policy.
energy prices we can't control either from country to country as well, and that's something that's like doubled or even tripled in some cases since 2021 or the last 12 months or so, because things we can't control at a macro level as well, and like war in Ukraine, for instance,
Right. So
impacting that.
real quick, congrats on the merger. That's awesome.
Don't jinx it.
Okay. And I know, Ethan, you've mentioned, and as we've chatted, your expansion into Latin America also as a way to like kind of hedge against regulatory risk and also decentralize geographically. Would you like to jump in on that or explain like how you're thinking about it?
Yeah, being a pool operator and ASIC broker, it gives us a lot of unique insights globally. And so we spend a lot of time with international miners, certainly a lot in North America where we're based, but also globally. I think the Chinese ban of May 2021 was really a wake-up call for a lot of folks in the space. Some of the best, most sophisticated miners were operating in China at the time, had very good operations, and then within a week period, suddenly had to get uprooted and move globally. And so it really, although it is a different legal jurisdiction in China, it really started getting people thinking about, okay, if I do have a single jurisdictional point of access, is that a risk to my business? And I think the answer is yes in many cases, and we're starting to see miners really think about jurisdictional diversification and taking that jurisdictional risk. There's a lot of mining happening around the world. It's very much so a global industry. While China did ban mining, they still probably have 15-20% of the network. And as Jaime mentioned, Russia is growing. I was in China last week meeting with some of the manufacturers and brokers there, and consensus was that the Russian miners are buying more machines than American miners right now. So I think that is going to be a story of kind of Russia against the US in terms of hash rate growth over the next decade. And then there's other regions of the world that are very exciting. Latin America has a lot of excess energy, a lot of renewable energy, and it's going to be monetized in very interesting ways.
Yeah.
Paraguay and Argentina, I think, are going to lead the way there.
We should know that's where we met, actually, was in Paraguay, as you're doing your field research there.
Yeah, Adrian and I visited, was it a 14 gigawatt hydroelectric dam in Paraguay?
Yes.
That dam is big enough to power the entire Bitcoin network.
That's crazy. Yeah.
And how much of that is being utilized today, that 14 meg?
So right now, Paraguay has allocation of 7 gigawatts. 7 gigawatts go to Brazil. It's right on the border. It was a very hot day in Paraguay. Everyone was running their AC, and only 3 gigawatts were being used by Paraguay. So 4 gigawatts of surplus energy.
So it uses 10% of the total generation, Paraguay's, of the Itaipu Dam specifically, which powers the entire country of Paraguay. And then the 90% that's left over, it sells back to Brazil, which powers then 20% of Brazil's entire population.
Yeah, but there's still 4 gigawatts available for monetization.
Exactly. That's why you guys are there.
Send
Why
hash
didn't
rate
you
to
take me
400
with you,
exahash.
Ethan?
100% renewable.
I mean, listen, just to bring it back to what the question, like what Ethan said, right? Like, at the end of the day, this is a very, very complicated business, right? So you think, I want to plug in a machine and I'm going to run it and I'm going to make Bitcoin. You have to be an expert in energy. You have to be an expert in what's happening geopolitically. You have to decide that if you want to decentralize away from the US, that you want to like enter into these countries, and you have to understand the regulatory arbitrage between the US and these countries. Are you in Canada? Are you in the US? Do you want to set up a Bermuda entity? I mean, it gets really complicated. And then you come to the risk management side of the business, and you have to think about managing your balance sheet and your treasury. And and then like Ethan knows this well, right? So as a pool operator, you're 80% of what you do is just a software development business, right? So there's a ton of work that goes into building out like quality tools that work really well.
Absolutely.
That the clients like,
You guys are really selling the space.
Yeah.
Well, okay, let's get into that just for a minute. In fact, like I'd be interested, Ryan, to hear how we gotta shout you guys out, because we have been going through a wicked bear market with seeing Bitcoin at 69,000 all the way down to 16,000. We've seen bankruptcies on bankruptcies, like excluding all of you guys. Like, you guys have made it and survived and weathered this storm. And so I'm really interested to hear how each of you have been able to hedge, like you mentioned, Ryan, like like your balance sheets looking at your balance sheets, banking, and being opportunistic during like bull runs and your treasury allocation. So I'm curious, could we dive into and like explain like I'm 5 what you're doing?
It's a 7-part question. Go.
I am sorry.
I'm going to start with one part. So, I mean, listen, for us, we were heavily involved in the lending business. I think we made a good call early on to stop lending to some of the miners. That really saved us in a lot of ways. You know, I know there's a lot of stuff that's gone on with our parent company, but in a lot of ways, like they've provided a ton of support to us and allowed us to keep, you know, operating through the bear market. You know, we've developed capabilities around hedging our balance sheet. You know, a lot of it has to do with energy prices and your exposure to energy prices. And, you know, are you in a good hosting contract? Do you own your own sites? Are you managing your energy well? So there's just so many things that go into it. I mean, the one thing I'd say is, like, I think everyone would agree, we may have made it through, but it has not been easy. So, and we're all still trying to kind of figure out, like, where do we go from here? You know, the appreciation of the Bitcoin price has been, I think, great for miners, but I think everyone's at this sort of nexus of, like, what's next and where do we think it's going to go and how do we manage, like, the next move, you know?
Right.
Yeah, all really good points. And honestly, I think this is what makes Bitcoin mining exciting. I know this conference is centered mostly around proof of stake layer ones. But for me, like, I really like the competition, the uncertainty involved. If you gave the 5 of us $1 million to go stake in Ethereum, in 2 years, we'd all have the same return. If you gave us $1 million to go build a Bitcoin mining company, you know, somebody might go build $1 billion company, probably Jaime, and you know, one of us may go bankrupt. And so it really does differentiate. It really does differentiate, you know, the active management aspect of Bitcoin mining, leveraging technologies, leveraging financial capital markets to build a good business and ultimately drive shareholder value.
I've said this before, but I think it bears repeating. Those of us that have survived or thrived in the bear market, I think the key is we were getting ready for the bear market in the bull market. And that's really how you have to think about your business. You can't live in the current market state because in this space, you know it's going to change, and you need to use that opportunity to get yourself in the best possible position for when those market forces move against you. And as we've all said, they moved against us in the most profound way possible in this bear market. Everybody was expecting to see 100K Bitcoin, so they weren't getting ready for 69 to be the top. And then we have an energy crisis, a supply chain crisis, Bitcoin tanks, the leverage crumbles in the system. I'm glad Ethan finds it so thrilling. I find it entirely terrifying every waking moment. But one of the things we did in the bear market or in the bull, and I think you see a number of the public miners like ourselves that thrived, it was because this wasn't our first bull market, our first bear market. We've lived cycles before, and we've got the war wounds to prove it. And one of the things that Hut did and was very intentional about was starting to diversify the business to bring in some protection from downside volatility. We were very, very conservative with our balance sheet. And I will say, some of you in the audience were probably part of this chorus yelling at me during the bull market saying I was too conservative, I didn't believe in the super cycle. And it takes a lot of internal fortitude to manage those cycles and the people telling you to do exactly the opposite of what you feel like you need to do in those moments.
Mm-hmm. You kind of touched on it or like skimmed by. I'm curious, have you or has anyone like taken that opportunity and during the bull market or, to invest in other things outside of the crypto market? Like, where else have you looked if you have?
Well, we obviously have. We purchased a traditional data center business during the bull market. So we have 5 data centers across Canada that have nothing to do with Bitcoin mining. They service enterprise customers from a variety of different industries, doing cloud, co-location, managed services. And it's given us an opportunity to broadly diversify, but also have an opportunity to start building more bespoke products and services for cluster GPU, CPU, kind of giving us the ability to tap into what we're now seeing coming in the AI space, which I think is really exciting. And we were able to put ourselves in that position again by using the bull to diversify and think about, I'm Canadian, so think about where the puck's going next. And I think we made some really good calls, and I'm
awesome.
grateful for that.
Excellent.
Yeah, I'll jump in on that topic too. There's a lot of memes about like Web3 bro turned AI. I think miners are uniquely positioned to do so, given that we work in the energy and compute space. I would say though, like, it's not an easy transition for a miner to make that transition. Somebody like Hut 8 has examples, they have sales teams to go out, sell their data centers. They have experience there. Whereas with Bitcoin mining, you only have one customer, which is the Bitcoin blockchain. So you don't have a sales team. You don't have tooling built on your services. You plug the machine in and connect it to a mining pool stratum, and suddenly you're getting paid for the hash rate that's being produced. So it is going to be quite the transition, I would say, for majority of companies. I think we'll see a handful make it. The companies that do make it will have to leverage the expertise they built in Bitcoin mining. In a lot of ways, we're more cutting edge than the data center industry in terms of things like demand response. So we need to be leveraging those advantages to bring it over to more traditional industries in order to compete with some of the incumbents.
Yeah, so I have a little bit of a different answer. We've been thinking about where the ball is going to bounce next, because I'm from America. But we've actually diversified into staking. So Foundry's invested a lot of money in building out institutional grade staking platform, and we're really excited about like what's going on in ETH right now. I think people think of us as primarily a Bitcoin mining company, but we think that when you see the Foundry brand and you think about our ability to sort of manage risk on behalf of our customers through the pool, hopefully you see somebody who can also do that in a different protocol. And so we're really excited about our offering there going forward.
That is really exciting. Yeah. Brendon, do you want to add something?
I mean, to your point with
Jaime.
Sorry, with the AI data centers, I mean, diversifying your revenue streams is, crucial to survive this bear market, obviously. But I think in terms of using it, like clean energy too, with being in Bitcoin mining and these data centers, that's been probably the biggest hot topic, I think, at the moment, because policy and perception with Bitcoin is not the same as it was 12 months ago. People, Washington does not like it. We're not in a great spot, but AI data centers don't have that same misconception, or don't have the same conception of Bitcoin right now. So I think that's a pretty smart play to do.
So
Thank you.
I want to kind of address. Let's say it could be like considered almost an elephant in the room. In 1 year, Bitcoin halving is going to happen, where all the Bitcoin, your revenue specific to Bitcoin mining is going to get cut in half, and then 4 years from there, it's going to do that again. So, what are you guys doing to hedge against this? Just built-in code in Bitcoin. We have people putting in tons of money building these mining farms right now, but in just a year, it's all going to get cut in half. So I'm curious, like, how each of you guys are hedging against the halving.
We just pray every night that the price will go up.
Hopefully, it doesn't get that bad.
No, listen, I was saying before that it's just like really complicated stuff, right? So I think, obviously that's something that's looming. I don't think any of us would be doing this if we didn't believe in the sort of supply and demand fundamentals of what's going to happen over time. Now, when that happens and how that happens is like the big question. And so, it's just complicated, right? You're thinking about your existing fleet. You're trying to think about the technology that's coming versus the technology that's there. You're thinking about energy prices. You're thinking about access to capital. At the end of the day, like, you want to have the most efficient machines running because those are the ones that are going to make the most money. You're thinking about what's going to happen in the price over the next, like, into the halving and then coming out of the halving, and you're trying to position yourself in the right way. So yeah, I don't know that I answered like exactly what we're doing, but it's a super complicated equation to figure out,
Yeah, I used to consider myself like a historian of Bitcoin mining halvings. So I spent a lot of time looking at 2016, 2020, and 2020 was the first one I went through like professionally, and I was looking at it a lot. We went through the halving. We went from 12.5 down to 6.25 BTC per block. What we saw was almost a 40% drop in network hash rate, which means 4 out of 10 operators went offline. And heading into 2024 halving, you don't want to be that 4 out of 10. How do you not become that? Well, having highly efficient machines, investing in new generation machines, having a very low cost of electricity. Ultimately, your price to mine 1 Bitcoin should be in the bottom quartile so that you're not one of those operators that needs to shut down in the case of diminishing block reward. And then you can pray for a Bitcoin price to go up. I'll certainly be praying with you. At the same time, as miners, we need to support activity on the Bitcoin blockchain that increases transaction fees. Innovations like ordinals we need to be pushing forward with. DLCs, other DeFi contracts on Bitcoin. I think as miners, we should be encouraging. That's going to be the majority of our revenue over the next few cycles. So we need to be pumping money into that, helping expand the innovation in those sectors.
That's excellent. Yeah, Jaime.
Yeah, I was going to say, Ethan, we're all going all in on ordinals. Didn't you just report miners made an extra 150 Bitcoin last month just from transaction fees associated with ordinals?
Wow.
Over time, that becomes very material.
I mean, I have just kind of a question, I guess, for the group here too. And as we think about risk management, as it kind of goes into operations, if for profitability of a site, or when we start halving here, and it becomes inefficient for maybe these legacy miners, or the energy prices go up, or policy becomes detrimental to the point where this site becomes you can't operate in. Are you guys thinking about risk management from a site objective or portability? If you have to pivot a site, or how many sites do you guys even have in your book, I guess, basically, of potential options that you go through, and what's the due diligence like for that event happening?
That's like a 10-part question.
It's like 3.
So our business is unique both today and assuming our merger with USBTC is successful. One of the things that I like about a diversified strategy is it allows you to kind of flex in and out of the business lines depending on where the economics are, both from a CapEx perspective and an OpEx perspective. So I think that's why we're driving the model that we're driving, and that optionality, I think, is critical to weather cycles with a lower degree of risk, on top of which balance sheet management is also very, very critical. So one of the things I think a number of us that have done well in this market did well was not have a lot of leverage. So coming into a bear market with a really, really strong balance sheet allows you to be more opportunistic during the bear, and less likely to explode.
Yeah. You think? Oh, go ahead.
I was just going to say that, like Foundry historically is not owned sites, so we've always had a lot of flexibility around the fleet, and we talk constantly about, should we be buying machines, should we be selling machines? I think you really have to have a trader's mentality as a Bitcoin miner. At the end of the day, like, you can't be beholden to, I'm just going to plug the machines in and again, pray that Bitcoin price goes up. I think over time, you really got to be able to have a trader's mentality. So like one of the key things we have is our Foundry X desk, which is an active trading brokerage. I know you guys have something similar. And so you just really want to have the flexibility that if you think the economics are such that you need to liquidate your fleet, you can liquidate at least some part of your fleet, and then you're looking for the next place to find capital or deploy capital that makes sense,
It's really interesting. Ethan, I wanted to circle back to something that we were talking about, which is hash rate derivatives. And if we could just unpack how you're using that to also hedge against the halving and how it works, that would be awesome. Like explaining on 5.
Yeah, so high level, we think of compute power similar to how we think of other commodities. What these computers do, the ASICs, application-specific integrated circuits, is they run through the SHA-256 hashing algorithm and create an output. So these machines fundamentally are producing compute power. They're getting paid for that compute power in Bitcoin, but the machines are producing compute power. And so, like we see in all traditional industries that revolve around commodities, having a set of tools that producers or even consumers can use to hedge their risks and mitigate some of those future risks is really important to managing cycles. When you look at the volatility of hash rate, the volatility of the value of hash rate, you see that's actually much more so than WTI oil, gold, and other typical commodities. And so what that means for miners is that they're at the mercy of these cycles. We go from $400 a petahash per day last cycle to now $80 a petahash per day. And historically, miners have not had a tool to lock in their profits for an extended period of time. And so we think there's going to be a future in which there's robust derivative markets, forwards, futures, options, swaps, all that will allow miners to transfer this risk out. And we also think it's going to be an incredibly interesting asset class for traders and hedge funds to really engage with. It's a very interesting asset that revolves around the semiconductor industry, the energy industry, and all of these really interesting points where I think a lot of traders can generate alpha from, and we'll start to see some nice markets being formed here.
Yeah. I mean, just like looking at the technology specifically, I wonder if we can we get into how it's advanced also in like the past 12 years and just how we've seen hash rate change and where we're heading?
Well, I think, originally like these are black boxes from China where you couldn't really do a whole lot. You didn't really have performance monitoring. You couldn't really, do remote hosts. And as, the last, 3 or 4 years, we've seen a lot of technology advances, just not only on the firmware level, but on the operating systems that have come out. And we have all these analytics and, remote monitoring and remote host Datadog integrations, et cetera, that have really benefited the operations side of crypto mining. At the same time, when you introduce new technology, it also introduces attack vectors. And so, your risk profile and your risk landscape change, as with anything when you develop. So, but that's one of the real winners of China banning crypto mining has made more innovations happen outside in the United States and elsewhere around Eastern Europe and so.
Yeah, I think, listen, like when you go talk to all of our clients, everybody in the industry, right? Like there's a ton of machines out there. Everyone's still building. I mean, I think hash rate is just going to keep going up and up and up. And then for it to ever go down, there just has to be like devastating economics and people effectively have to shut down because it just doesn't work anymore. So again, I think people aren't going to stop building. Hopefully the price appreciation supports the industry, and at the very least, we sort of punt it to the next halving. But I think it just keeps going up. Will it go up as fast as it's gone up? Maybe not, but I'd be curious to hear what you guys think.
Well, we're above where consensus was that we'd be at by the end of the year. So we're going way faster than anybody predicted. Obviously, the halving always creates a reset.
Fun fact, the halving will occur around consensus next year.
Fun fact.
I'll have to rerun this panel.
Well, hopefully we're not all rocking in a corner somewhere.
I didn't mean to interrupt, Jamie.
I think I was done.
Yeah, so I think for like technology advancements, which was part of that question there, like it does revolve around advancements in the chips itself. And so we've seen Moore's Law slow down, but overall Bitmain and MicroBT are still shipping more and more efficient machines. Predicting into next year, maybe Bitmain launches the S21, probably the first ever machine that's under 20 joules per terahash. But there's all these complementary technologies that people are leveraging to either reduce their costs or increase their revenue, which is the ultimate goal of miners. So on the operation side, you see things like immersion technologies, cooling technologies that exist to aid you in reducing your cost. You have ASIC management software that can help you better manage your fleet, make sure you don't have as much downtime. That integrates with things like demand response, how miners are participating in the electricity grids to earn extra revenue and helping stabilize them. You have things like firmware. A lot of third-party firmware now, including Luxor, is built to help optimize machines and give you more command control. And then you have financial tools as well. So technology advancements have not slowed down.
Immersion too, right? So yet another interesting technology development. So
Immersion?
Yeah, immersion technology. So we were just recently visiting a client that was showing us like 3 layers of immersion technology going up to the ceiling, where you can effectively put the machines in a liquid and overclock the machines. So, just huge amounts of money being spent on infrastructure to support the industry and make the machines more efficient and make the businesses more solid, more the sites better built with better infrastructure to support the machines for longer, to get more out of the machines. It's really fascinating what's happening.
It is really interesting. I'm curious, is this like all, I mean, most of the miners are ant miners, like, if I'm not mistaken, we're seeing a lot of these mining rigs being built by the same company. So I'm curious, like, are these also the same people making the same machines?
Well, like all the chip manufacturing's in China, yeah, right. And we saw Intel recently, build some and then exit the same space as well. So ships with China as the way it is. We do need to start thinking about decentralizing, the manufacturing of these machines as well, just for our own safety, honestly. But at the moment, yeah, they're mostly all China.
Yeah, I think it was disappointing that Intel had a false start in the space, and I think it'll be quite some time before they come back if they do. And I do think that's a big loss for the industry as a whole.
Mm-hmm. And NVIDIA is basically just saying that they're just going to go all AI, no crypto mining either, exiting that space as well. So it's been disappointing to see that, for sure.
So if you could wave a magic wand and place your site anywhere in the world, where would it be and why?
Well, I think that's super
I don't know.
hard.
Ethan's got me really interested in Paraguay all of a sudden.
Somewhere like Bahamas, maybe.
There's so many
just
things
wanna
that
live
factor
there.
in, to getting a site, right? Where you're talking about not only the efficiency you get from, your energy, right, or cheap access to energy, but you talk about, legal policies and so forth. But then we talk about like due diligence of vendors or services, right? Whether you're doing a self-hosted site or third-party hosted, either way, the services you have and like due diligence on that aspect is another risk that has to be factored in. And also like energy reliability as well. South America is a great spot, but a lot of places in South America have a lot of blackouts, and so that's another risk to factor in.
Yeah, there is no jurisdiction that's perfect. And while we have talked a lot about international diversification today, there's eventually going to be no places to run to if we keep abandoning where we're currently mining. And so I think, the work the Texas Blockchain Council is doing here in Texas, what other advocacy groups are doing, what miners are participating in across their provinces and their states is really important. We got to draw the line. We got to make sure that Bitcoin mining is accepted in North America. And so while it is important to international diversification, we can't give up on North America. This has to be our home for miners.
I couldn't agree more. And we are starting to see some signs of sentiment improvement. We finally saw a positive article come out from the World Economic Forum about Bitcoin mining earlier this week or last week. I'm not even sure what date it is. But we just have to keep doing the education and the advocacy. And I couldn't agree more. North America has to continue to be a leader in this space.
Yeah, I agree. I think my answer would be that, in America, that's probably, let's look like core tenets of sort of freedom and capitalism. I don't know that there's like a better place in the world to have a Bitcoin mine. Some place in South America, they may say that they have cheaper power and that they're open to bringing Bitcoin mines. But there's a lot of risk that comes with kind of entering those jurisdictions. So.
Right.
Yeah, I'm like a America First guy. Sorry, but I know you guys
don't forget about
everyone
your
else on
neighbors
this
to the
panel is from
north,
Canada,
man.
so
Right.
We got Mother Nature working in our favor. It's nice and cold, lots of energy. Ethan and I are both from there.
Well,
Taxes, though.
Your girlfriend's Canadian.
Yeah, but she's moving here.
Well, thank you guys so much. Really appreciate being able to unpack such a complicated topic. The way we started, really, it's not just about plugging in the machine and getting your Bitcoins. And so I mean, everything you guys are doing to hedge against this volatile market, regulatory risk, technological risk, like, I mean, and just like the way that the code works and the way that the machines work, it's really fascinating. And I do hope to see more mining here in North America, as well as South America. Latin America really is like a untapped potential, and it's all renewable. It'd be interesting to see that happen as well. But it's the regulatory risk, like you mentioned, is real. Does anyone have anything they'd like to add or say?
No, thanks so much for having us,
thank-
and thanks to
thank
the
you guys
audience
for
for
being
being
here.
here.
Thank you, guys.